I'm Deborah Borchardt, and this is your midday market update. When we look at all our indices, we're seeing some selling happening here on this Tuesday. And why? Well, we got some March trade data in. And as a result, if you looked at the headline, you thought, well, why are we seeing the selling? Because this looks good. But if you dig a little deeper, you'll see why. And that's because it's actually showing that we're coming down a little bit on our trade data, and also the imports were going up. Joining me now is Keith Bliss from Cuttone. So Keith, you and I were just talking about some of the leading brokerages and their economists taking their erasers out, scratching out their GDP numbers and taking them down a notch.
Well, certainly for the first quarter, and I'm sure they'll be making revisions on the second quarter. Now, yeah, absolutely. They've actually, some of the bigger firms have now come out and said they expect, once they give us the preliminary number and then the final number, so you know we get 3 readings on GDP every quarter, and we got the advanced number last week. Once we get those, they're going to actually show negative growth for the first quarter. So that's a little bit of an unwanted curveball to not only the growth forecast but also the equity market. So yeah, it's a little bit of a troubling sign. As the data gets curated better and gets parsed out better, you're able to see the real picture underneath it. Now, belying those statistics a little bit is some of the data that we've gotten on the individuals. Personal income is up, inflation is still in check, spending was up. So it's going to be interesting to see how that all blends together when they do come out with those final numbers. But to your point, what's happening today is that when you get weakness inside of one of those real headline numbers, and you've also got China that's clearly weak with their PMI data that they came out earlier, and Europe is getting there, but it's still not going great guns, it's going to impact the market.
All right, then we have another thing that's happening, and that is as we start to wind down earnings season, when we look at the Dow, most of the components have reported, and you were saying that we're starting to see not so good signs from those earnings.
Yeah, I mean, it's another one of those things. What's fueling the rally? I mean, that's the big question mark that we've asked for a couple of years now. Last year was pretty easy to answer, but that's what I always look at. But to your point is that as of last Friday, 27 of the 30 Dow companies had reported, and they're actually got, as a group, they have a negative earnings growth rate for the first quarter, and that's going to be the third time in the last 4 years a year-over-year earnings growth decline for the Dow 30 companies, but yet the average keeps going up. More importantly, and the one statistic that I always look at is their sales growth has really flatlined at this point. So the larger corporate companies, the multinationals, they've got a real challenge in front of them about where is the revenue growth going to come. I think you'll see that start to impact the market here a little bit. If not bring it in, I don't think it's going to come in that 5 to 10% that everybody wants to, but at least will flatline us for a while.
All right, well, as you know, these indices have really struggled to push beyond where they have that resistance, haven't seemed to be able to break through that, and every time they get there, they pull back. That's Keith Bliss from Cuttone, and I'm Deborah Borchardt with The Street.